Welcome to today's market report. European stock markets are seeing opening marginally higher on Monday, helped by fresh impetus in the search for a new US stimulus package, but continued worries about the COVID-19 surge will likely limit gains. DAX future traded 0.4% higher at 13,000. CAC was up 0.5% at 4,900. FTSE was flat, trading just below 6,000 the figure. On Sunday, the Trump administration called on Congress to pass a stripped-down coronavirus relief bill. This comes after it proposed a new comprehensive $1.8 trillion stimulus deal on Friday that immediately ran into opposition on both sides of political divide. Although the offer moved closer to the $2.2 trillion proposition House Speaker Nancy Pelosi had already put on the table, it was still not sufficient to appease the Democrats. While it also annoyed some Republicans, many of whom are reluctant to add to a growing federal debt pile. At the same time, worries about the coronavirus remain a constant thorn in the side of the European markets. France may have reported a drop in new COVID-19 cases to 16,101, the lowest number in 5 days, but this followed two record-breaking 24-hour periods. Italy is preparing new nationwide restrictions in response to a spike in new cases, while Germany is also considering this possibility. Additionally, British Prime Minister Boris Johnson is expected to announce new measures to tackle a growing crisis on Monday, outlining 3 alert levels aimed at helping tailor restrictions for different parts of England. In corporate news, the tech sector will be in focus following a report in the Financial Times that European Union regulators are drawing up a list of up to 20 large internet companies that will be facing new and tougher rules targeted at curbing their market power. These new rules will force the companies to share data with rivals and be more transparent on how they gather information, the report said. Oil prices weakened on Monday as output was restored in Norway, the world's third largest exporter of oil and gas, with the end of a strike. US producers also began pumping again after hurricane data weakened. US crude traded 1.1% lower at $40.17 a barrel. Brent contract fell 1% to $42.41 a barrel. Gold futures rose 0.4% to $1,933.25 per ounce. On the FX front, GBP/USD fails to extend Friday's upside momentum despite staying above 130.20. The cable steps back from the 5-week high flashed on Friday, while the US dollar remains pressured. Fears of a no-deal Brexit and the economic burden of the coronavirus keeps the quote depressed near a multi-day high. As a result, traders will look forward to hearing from BOE Governor Andrew Bailey and US Prime Minister Boris Johnson for fresh impetus amid the US holiday. US PM Johnson is up for an Australian-style trade deal if there is no deal by 15th of October, pushes Germany to bridge the gap. Additionally, Reuters suggests that Britain's government on Sunday urged businesses to prepare for the end of the Brexit transition period, saying that they need to take action whether or not a trade deal with the European Union is clinched. On the other hand, the surge in the virus numbers recently to 590,000 exerts immense pressure on the Tory government's no national lockdown motto. While trying to safeguard the same, Boris Johnson is up for announcing stricter activity restrictions for the Tier 3 states, the majority of North England, on Monday. While spotting the same, The Sun said hotspots placed in Tier 3 could face new tough measures for up to 6 months. Traders may wait for a clear break of an ascending trend line from September the 16th at 1:30.55 for cable before confirming the further upside towards the early August top around 1:31.85. On the contrary, 50-day SMA near 1:30.25 holds the key of GBP/USD sellers entry, targeting the 1:30 threshold. Euro-dollar gapped lower in Asia on renewed coronavirus concerns. The pair is currently hovering near 1:18.15, representing a 0.15% loss on the day. The pair may have a tough time extending its two-week winning streak as the Eurozone inflation expectations have diverged lower from the US inflation expectations. Swap traders are betting on the US leading the economic recovery from the coronavirus-induced recession, basically. Further, the US Treasury yield curve has steepened in a dollar-positive manner to the levels last seen in November 2016. The dollar index was up 1% at 93.108. Dollar yen was at 105.50. This is today's market news. Thanks for listening. We'll see you next time.